All right, welcome to 2024 and beyond. If you don't think about the future, you won't have one. So we'll just wait for everyone to jump on the call. It's generally one of our bigger events for the year. And me and Viv, I've got Viv Govender with me here. We're going to I think we're going to answer 25 questions. And within those questions are predictions and a lot of discussion about where we see markets. And I suppose we're also going to have a review of how we performed last year. But also both from a market and the 25 questions that we asked in 2023, as well as the performance on the underlying model portfolios, and some changes to the business and some changes as in that we launched a new portfolio based on themes that we picked up in the 2023 event. So hopefully you guys find it useful. Because it's a larger webinar, I'm going to ask you guys to hold questions till the end. I mean, feel free to hit them in the chat window or the Q&A. We will stay on afterwards and answer the questions, but I'm not going to pause the webinar to actually answer them. If we have a look at the agenda, so topic 24 beyond, a quick introduction. We're going to look at the year in review. We're going to look at what we got right, what we got wrong. If you looked at my Twitter post, we had a bit of a shocker this year, but you're going to see. Then Viv, I'm going to hand over to Viv. He's going to set the scene, just to have a look at, I think, the big drivers of markets and investments at the moment, the key themes for 2024. We're going to go through the 25 predictions. Of course, this is an interactive webinar. I'm going to share the link in a little bit, but you guys can have your say as well. And what we do is, we ask these 25 questions. We want you to, it's like a pub quiz. It's like a market pub quiz, sort of. So you guys are going to answer the questions as well. We're going to go and have a look at how the audience did last year. And then, of course, we've got some prizes. So today I've got Rassi Erasmus's book, of course, a signed copy. Yes, it is a signed copy. Yep. Signed copy, and we're going to give away Nick Mallett's book as well, also a signed copy. And then there are some chocolates and other goodies as well that we're going to give away at the end. So that will be prize giving, and we've got the winner for today, and then we'll stop for, as I say, the Q&A at the end. So the year in review, what Rand Swiss got wrong and what Rand Swiss got right. So before we get to the actual underlying questions, one of the things that we did is we really restructured our whole business in the last year. So we had a lot of different products and a lot of different silos, and we've kind of simplified the business dramatically. Kind of mid-year last year, we really said it was like Facebook. It was like a Meta, which was one of Viv's picks. We said a year of efficiency, and we've really narrowed the business down into our securities broking, our managed solutions, which is model portfolios and structured products, and now wealth and advisory as well. So we've got CFPs like Kyle and Yaku, happy to sit and work with investors to really build up good investment portfolios, and I think it's working. I think it's working, and I think other guys are agreeing, because obviously, as you guys know, we always enter the top broker awards. We won it again. So we've now won it 2019, 2021, 2022, and 2023. So 4 of the last 5 years, we've been ranked as the overall best broker in South Africa. And it kind of adds to our trophy cabinet, which is great. So we've been getting things right. Clients are happy. Performance has been good. And I'm laying all of that up because our predictions were absolutely shocking last year. And we're going to go through why, and we're going to go through kind of the story that we told last year and how the world differed. And Viv and I were chatting about it. And when new information comes, like, you have to change your mind. So it's always very, very difficult when you do something like this. You make predictions for the year, something, material changes in markets, you change your opinion, we change our positioning in portfolios, but we're still going to be measured on what we said in the beginning. So let's go through it. This is actually the 5th iteration of this event. So we've done this all the way since pre-COVID. I think the first one we actually called COVID as well. So we were doing this in January, and we're saying just be, we always do the last section. You'll see it doesn't actually count towards the scoring, but we always do a black swan section. And we actually said, there's this virus in China, and it could be a black swan event. And I think that was one of the first events. But it's kind of a tradition among our clients that we do this every year. And the nice thing is, as I said, you guys get to participate, and maybe you will be the top forecaster of 2024. So last year we actually beat, so Viv and I's predictions essentially beat the best forecast out of the audience. We beat them, but this year we were shocking. So the best forecaster got 76% of the questions right. We only got 44% of the questions right, while the audience got 52%. So you guys were smarter in aggregate than we are, but let's look at the questions and kind of go through the scoring. Now, remember the whole game here that we're going to play today is we've created questions, and the more difficult we can make the questions, the better. The idea is to try and make these as binary as possible. We're not making questions like, do we think South Africa is going to grow at 12% next year? Nice, easy layup question. It's not. We know it's not going to grow. We're trying to get the questions as difficult to answer as possible. So it should be quite hit or miss depending on where things are. And I think the big themes that I pulled out last year that it was really the recession. So I'm going to start with the big questions that we started with last year. And I mean, I think we need to kind of paint a little bit of a picture of what was happening, as we came into 2023. Markets were down 20% in the US. Tech stocks were hit even harder. We had rising inflation. We had come out of like a very difficult period from a geopolitical conflict point of view, and everyone was concerned. We saw inflation going up. We saw markets down. We know markets are a great leading indicator of economic activity, and everyone is predicting recession. And you see, I put a little percentage score there as well. So that's actually the percentage of the audience that got the question correct. So we said, will the US go into recession last year? We thought yes. Market's down 20%. The market is predicting a recession. We think it's something that should happen. The recession didn't materialize. And a lot of the questions kind of lead into this recession that didn't happen. And I think we're going to ask this question again this year. Will the US now go into recession in 2020? Is it a lag, or are we going to, as Jerome Powell has been saying, it's against the historical record, but could we have rising interest rates, get inflation under control without the US going into recession? And you can see this across many of the questions. Will the US go into recession? We said no, we got that wrong. Will unemployment rate break 5% in the US? We said yes. In our mind, we had a very clear picture that the US was going to go, that the world was going to go into a very tough period economically, but we were very optimistic on markets. And you can see China's GDP growth will it come in above 5.5, at least 5%. We didn't think so. We thought definitely a slowing in China. We saw like a big contraction. This was our forecast at the beginning of last year in economic activity. Will the Fed start cutting interest rates? We thought with the contraction in economic activity, you would have to see central banks responding to try and buoy growth. And we thought the slowdown in economic activity would match the slowdown in inflation. And I think what we had this year was very, very unique. We had the labor market. I mean, Viv and I have been kind of looking at the labor market all year going, how on earth is this labor market so strong, specifically in the US? It just doesn't make sense. Given the inflationary environment, people should be demanding more wages. It was a weird situation. So we didn't see, unemployment break 5%. And we didn't see interest rates cutting. I remember it was a very borderline call. We kind of said we're going to look at interest rates in a lot of detail down, today as well. I think it was a debate in the presentation. But it was like, no, end of the year. I was like, I think first quarter next year. And we kind of went backwards and forwards, and then eventually we said, okay, let's go for broke. We'll go for a cut this year. Going to look at the expectations on that as well. But with the underlying economy just remaining so strong, and yet at the same time inflation starting to come down, we just didn't see the requirement for the Fed to cut interest rates. So a lot of the interest rate questions also we struggled with. Rand dollar, a lot of guys got that one right. Rand dollar, whenever we make the prediction, we've got the Rand dollar prediction in again today. We're not trying to make it easy for you. So from when we put together the questions, the Rand weakens on average about, call it 6 to 7% per year. So we took the moment, the rate that we're looking at now, we added 6%, and that's where we came up with our level this year, same as last year as well. So again, we're trying to make these questions quite binary. And even then, only 46% of people got that right. I'm just looking at any other big questions. Will gold reach? Okay, so that's one we got right. Platinum, we're going to go through, I think, our platinum story again. We very much focused, I think, on the supply side of platinum rather than the demand side of platinum. And the other big theme that we had, we thought crypto was over, to be honest, which was definitely wrong. And again, we've actually this year done our crypto licensing. We've actually just been approved for our crypto licensing from an FSCA point of view as well. But at that stage, Bitcoin was well sub $25,000, per Bitcoin. And we had, all sorts of things. And I think, Viv, you can talk to it. We were saying, will Binance survive? And we almost said, like, did Binance as a company survive? But essentially management did not, went to jail. So you've got to be, like a lot of these questions are not simple answers, but we were very, very bearish on crypto, and we've seen that turn around in a big way now. And I think, with the regulation around crypto, we've seen crypto ETFs in the US being approved by the SEC. We've had the FECA making big strides on crypto as well. As I said, we've just got our crypto licensing approved. And yeah, so I think interesting, but very, very tough year. Yet, like I said, portfolios and performance was actually pretty good. And I'll go through the performance stats in a bit as well. So that's last year's questions. We're going to announce the winner. The winner actually got 19 out of 25. One of our clients who works with one of our advisors, very, I think a good one. But yeah, we'll announce that now. So now over to setting the scene, Viv.
Yeah.
What you think is coming up in the year ahead and where we're at.
Yeah. As Gary said, last year we were pretty off the mark in terms of predictions, but really very on the mark in terms of the performance. The reason being is that there were many developments in the year that basically occurred that really changed our opinion. And one of the things was AI. We started an AI portfolio. It was early last year because of the fact that we saw GPT-4 come out, and that kind of blew our minds, and it was pretty obvious what's going to be happening thereafter. And obviously that kind of changed where the market looked. But seeing the scene for the year ahead, there's a couple of themes I want to talk to you guys about. Okay, the first one is demographics. Now we are going through one of these kind of things, demographically in the world that changes the way the world looks, eternally, forever, going forward. And the one big thing that's happening right now is that we are seeing significant drops in fertility rates around the world. And you may think, okay, this is a very long-term pattern, but this has been happening for a while. You can see, some of these places like Asia, the peak happened basically before the 1980s, and has been dropping significantly since then. Europe as well, we're talking about peaks, before the 80s. Africa peaked just after the 80s and has been dropping, ever since then as well. We are seeing a change in the way the world functions, and it's going to have numerous effects around, your investments as well. So just to show, this is the world map right now. This mark here is basically replacement. This mark here is basically replacement. Okay, this is at the point at which you can keep your population stable. The world is pretty much being held up by Africa. Without Africa, we'd be, way lower. Much of the world, Asia below it, Europe below it, North America below it. These are all, significant changes in the way the population is going to be looking going forward. And what does it look like, and why does it affect you? Well, look here. This is OECD. The OECD basically population in terms of workers, where 2000 was the 100. If it's 100 in 2000, look at Japan. Japan was 100 in 2000. By 2050, it's going to be 61. What does that mean? That means for every 100, workers you had in the year 2000, by 2050, Japan's going to have 61 workers. Look at Korea. Same thing. We're talking about 80 workers for every 100 there was in 2000. Germany, 85 for the 100 was in 2000. Italy, 80 for the 100 there was in 2000. What that means is the number of people working in your country as the share of the population is falling. Now, the population itself may not be falling. So people are looking at places like China and so on and saying, hey, the population is not quite falling yet. China, in fact, had a falling population in the last couple of years. This year it fell about just under 3 million people. But out of 1.6 billion, you're thinking that's nothing. But what the real impact is what's happening with the working age population. Because number one is when people retire, they still appear on the population statistics. A person that's 80 is still a person in the country, but they're not working. And only are they not working, they are now becoming consumers of stuff in the country. They're requiring additional care from their children, from the state, and so on. And if you look at this particular thing here, this is what the graph of the world looked like in 1950. You see, it's a pyramid. It goes like this. Lots of young people, much fewer old people. And it's a pretty stable pyramid. Look at every single period since then, and look at the forecast from 2018 to 2050 to 2025 to which was 2100. Okay, the world is looking like this. that change to this thing here, okay, is actually very, very impactful. It's going to do a couple of things. Firstly, it's going to change the makeup of where things are made in the world. Because you're going to have a whole bunch of people right now who are going to be above this part here. Look at it. Look how much more, okay, people are above, sorry. Look how many more people are above this level here in 2100 than they were back in 2050. A huge number of retired people. People that are basically still going to be in the population, requiring government assistance more than they did before, and also not working. What does it mean? It means that governments are going to be facing massive amounts of debt. That's just the way it is. Most developed countries have made huge promises to the older populations in terms of things like Social Security, in terms of things like Medicare in the US. You know, other parts of the world is universal healthcare. It's universal, you know, towards social healthcare. It's you know, even more generous relatively, you know, pension plans in places in Europe. When you have so many more people over the age of 65 that are not working, and obviously going to need more medical care and need these pensions, huge amounts of government debt. And why is that important? Because the trends that we're seeing now that we think are temporary blips might be actually the first signs of what's going to be like a trend that's going to last the next 70 years, if these graphs are correct. The next thing I want to point out is a key area in the world that's really, really dangerous and might just be affecting you this year. The stuff about the demographics are basically showing something that's happening this year that are going to be reflecting over the next couple of decades. This particular thing about the Straits of Hormuz, it's more realistic, it's more near-term an issue. Now look here, the Straits of Hormuz are this little piece of land here. See this little piece of sea here between Iran and Saudi Arabia and Oman, right about here, a little bottleneck. Now, what's so important about that? Well, if you look at the amount of petroleum, okay, going through that little thing every day. Back in 2018, it was 20 million barrels, okay? This is a bottleneck that squeezes the whole world. Now, in terms of origin,
we're talking about 100 million barrels total.
Yeah.
Yeah, per day.
Yeah.
So 20% of the world's
oil.
Yeah.
Yeah. So basically, we're looking at a situation here where, look at these countries: Qatar, Iran, UAE, Kuwait, Iraq, sorry. Okay, here we are, sorry. Okay, Saudi Arabia. These are the countries that are exporting stuff through here. It makes sense. Look at Iraq, where can it go to? Kuwait, where is it going to send oil through? Saudi Arabia has two choices, but if you go to the east, it's going through here. Okay, this is basically where much of the oil that goes to places like South Korea, Japan, India, and China go through. Now look at that. The amount of oil going to China, going to India, going to Japan, going to South Korea, that comes from this part of the world is huge, and it all goes through this little gap here. Okay, now why is this important? If you look at what's been happening in the news lately with Gaza, you know, towards the 7th of October and so on, it's continuing. I mean, of course, with South Africa taking Israel to the International Criminal Court, etc., or Criminal Court of Justice, rather. But there is widespread belief, especially among Westerners, that Iran was responsible for this. Iran has supported Hamas. Iran also supports Hezbollah, which is up here in Lebanon, and the Houthis, which are down here in Yemen. Okay, Iran is considered to be the power behind the scenes. Therefore, there is a belief that if you want to solve these problems with the Houthis, with Hamas, etc., you need to sort out Iran first. If you go to war with Iran, what's going to happen? Guess who has a lot of access to this little piece of water? The Iranians. And if you want to be shipping big tankers full of oil through this here, the last thing you want is some drones attacking your thing with explosives, or having the area mined with bombs, or have attacks from smaller boats shooting at your big container of flammable gas or oil. Doesn't work. So if there isn't a blow up in terms of Iran here, expect the Strait of Hormuz to be closed or really severely affected, where the Houthis are nowhere near as powerful as Iran, and they're already affecting the flow of stuff through the Red Sea, which is down here between Yemen and Djibouti. Okay, And the Houthis, which are a ragtag group of people, are able to do that. The Iranians, basically, the only reason they don't have a nuclear weapon is because there's massive sanctions imposed on them to stop them getting a nuclear weapon. That's a far more sophisticated army, far more sophisticated power. They are sending drones to Russia to help with the Ukraine war. They could easily use those drones here. Okay, you cut off this, what happens? Suddenly, India, China, Japan, South Korea, much of Asia loses out on their energy imports. Not all of them, but a large chunk of them, a large enough chunk to make a difference to the world. These countries, Saudi Arabia, Iraq, Kuwait, UAE, Iran, of course, Iran's a thing here, Qatar, all start losing out in terms of the exportability. We would see oil prices, natural gas prices go up significantly on that. We would see other inflationary pressures coming through as well because the world's manufacturing center in Asia will be without power effectively. So yeah, this is another key, thing to watch out for 2024.
Okay. Okay, cool. So that's, I think, yeah, two I think key risks, key themes within the market that we've got to be aware of. And I think let's start the questions. So yeah, okay, so we're going to start off with the top one. I've done a couple of charts on the next slide for you guys just to help you when you're doing your own predictions. We're going to leave the predictions, so there's a link that I'll share at the end of the webinar that you can go online. It's literally, you just go to ransford.com predict2024 / predict 2024. You'll complete them. We'll give you this just so that you can kind of understand it. These are going to be our predictions. We're going to leave the survey open until the end of the month. So until the 31st of January to complete the survey. Then we'll take the survey down. Anyone that's entered obviously will be in for the competition for next year. But yeah, the first question is, will gold prices trade above $2,200 per ounce? We're saying yes. Yeah. And I think, from my side, okay, so there's the gold price at the moment. You can see we're trading around 2024. So it is what, just under a 10% move higher. Why do we think it? I mean, personally, my thoughts around it is we probably are going, and we're going to look at interest rates now, but when you cut interest rates, gold becomes relatively more attractive. Gold does not pay an interest rate. So if you're sitting in almost a safe haven asset, like you've got a choice between US dollars and gold, and US dollars are paying you 4% or 3.5% as the risk-free rate, suddenly you're looking at gold and going, hey, this is pretty expensive to hold gold. But on the other hand, if you suddenly see interest rates coming down quickly, suddenly gold becomes relatively more attractive, and you might see a little bit of a boost there. I think on the other side, the typical, like other reason to hold gold is, to get it out of a financial system. I think crypto to an extent has taken some of the shine off gold, which is maybe why we've seen a flatter profile. But Viv, you happy with a call yes on that?
Yes. Also, I mean, if there is, like I said, the chance of a conflict in the Middle East, gold will be very attractive, especially because the countries that are going to be very badly affected, India and China, really love gold, and so they are much more favorable towards gold as a safe haven than to other
I think Viv was the first one that taught me about the love trade and the fear trade. And when you have something in the Middle East happening, it affects both the love trade and the fear trade. So the fear trade obviously being you go to gold when things start to get when geopolitical conflict starts spilling over and you get really concerned. You want money out of the financial system, you buy gold. At the same time, as you say, India, China, actually rising GDPs in these countries actually assist with the rising income, assists with people being able to afford and buy gold. That also kind of buoys the price. So again, remember, these are going to be quite borderline calls. It's difficult. I mean, this is a 10% movement higher in gold. Gold has done pretty much nothing for the year. We're saying yes, we might have another shocker next year, but I think we're going to be better. We put some layup questions in as well. So will the platinum price trade above, $111 per ounce? Platinum, you can see, has also been very, very flat. We were up at about, above 1,200, kind of 2020, but this was like in a world that was shutting down. You had a big commodity price spike. Since then, platinum's done nothing. My concern when we were discussing this before was really more on the demand side. Platinum, about half of platinum, so less than half, but a lot of platinum demand is obviously taken up in those autocatalytic converters. If we're seeing a big shift towards EVs, what are the chances that what is going to replace that demand for platinum, especially when platinum is also recoverable from the autocatalytic converters? You've got a lot of platinum that's already been mined. But I think, after kind of throwing ideas around, the best place to go look if you're interested in the platinum market is the Johnson Matthey reports. there is the potential for a supply side shock, specifically coming out of South Africa. And I think that's why we're looking for potentially higher oil prices. You know, the big at least higher platinum prices at least. The other big player, of course, Russia. Also, we've got geopolitical conflict there. But Viv, your take on platinum? You happy with the score?
Yes, I am. Look, a couple of things. Firstly, the EV push is stalling to a certain extent. Other than Tesla, everyone else tries EVs isn't making a huge profit on them. You look at, for instance, Rivian is being quite, slow on the ramp up. The Ford Lightning, which is Ford's basically answer to the Cybertruck before the Cybertruck even came out, they're cutting back significantly on production. You're looking at most of the US electrical car makers are actually severely, revamping or redoing the predictions in terms of electrical vehicle adoption. It's going to be slower than we think. At the same time, we do expect, just one of the questions coming later, there could be more load shedding this year than there was in the previous years for a number of reasons, and that could, really affect the ability of South Africa to produce platinum into the world, or input platinum into the world electrical system. And of course, like Gary said, Russia is still out, and Zimbabwe is also effectively not being a huge player recently.
Okay, so then if we just have a look at Brent crude oil. So Brent crude oil also has been quite static. We're at about $78 a barrel now. So we're looking for a significant increase in the price of Brent crude oil. And I think we're going to need a shock here. So, I mean, my take on Brent crude is, if you look at OPEC Plus, they can't really have oil prices going too high because you do accelerate the transition towards EVs. If you look at OPEC Plus, it's essentially a cartel, but it's a monopoly to an extent with just the strength that Saudi Arabia has within that cartel. It's one of the reasons that OPEC has lasted far longer than tin cartels and coffee cartels in the past. But that's a big move. Like for me, that seems like it's outside that kind of $65 to kind of $85 range that you kind of feel OPEC Plus is in. But I'm assuming the call here is that something's going to go wrong. Strait of Hormuz closed down. 20% of the world's oil going through the region. Conflict in Russia as well, also another big oil producer. I think there's a lot of key risk that could potentially see a spike above it. Now, also, what's key to note on these questions when you're reading them, all of these questions here are: will it trade above? So at any point during the year, if gold is above 2,200, if oil spikes above 90, that's what we look at. Even a spike above 90, we're going to call that question. Just be aware. Later on, we'll have questions around things that are finishing above the level. But I think, given the geopolitical situation at the moment, things feel volatile. It feels very volatile in the world. And to get some sort of supply shock to Brent, I think it's a reasonable bet that at some point this year, we're going to see oil spike through 90. Yeah,
I mean, the things against that would be the following. Firstly, we are having in the US really pump up production, and US production has been to some extent a ceiling in terms of global prices because they are able to go out there and effectively supply to the market at certain levels. That to a certain extent, is one of the things against us. Also, if we look at basically the trend here, oil prices have kind of like averaged about $70 to $75 a barrel, except for these periods of shocks and so on for the last little while. We haven't really seen oil spike up from like the early mid 2000s basically. But as Gary said, I think things are changing a bit here, especially around, one more thing around OPEC as well. They've had defections. So more recently, Angola has left OPEC because they want to produce more. Nigeria is also, it's shaping against the restrictions because they want to be producing more, and OPEC wants to restrict prices or restrict supply to increase prices. But I do think that this is a very aggressive call, almost 20% increase. It was about 20% when we called it. Right now it's a little less because the price has risen a bit, but still well more than 15% in terms of the call, in terms of the increase in terms of prices. But I do think that tensions are going to continue this year. We are going to see a lot more activity around Strait of Hormuz, around the Red Sea. There might be more difficulties with regards to the Middle East, and as well as Russia also being hit by, for instance, Ukrainian drones and so on. Apparently, just the last week, Ukrainians hit a facility that uses or basically is used by about 20% of Russia's export capacity for oil. And when you have these huge things that are basically full of flammable stuff, one or two drones can do a huge amount of damage. And this is the danger that I think is going to be continuing going forward from here.
Okay, next question, Bitcoin, trade above 50,000. So we're changing our opinion totally on this. So last year we were very negative on crypto, and I think bringing crypto within the the formal regulated space, I think is going to do a lot for the industry. So will Bitcoin trade above $50,000? We're saying yes. Now, remember, this is a very borderline call. I think Bitcoin can do just about everything. It's incredibly volatile.
It's almost a third up from you.
Yeah. So when we were looking at this, I think it was at about 42,000. I think it's at about 38,000 now. So it obviously very, very volatile in Bitcoin. It's an incredibly speculative asset class, very, very fringe alternative. But yeah, definitely capturing investors' imagination. Like I said, we have actually pursued our licensing because we work with one of the big Swiss banks, which was actually the first crypto custodian that you could transfer Ethereum, Bitcoin, and that into. We've traded crypto derivatives for a long time, so it's nice to see that the FSCA is regulating it. Would we put it into global equity portfolios, AI portfolios? Not at this stage, but definitely for an intermediary service, it's something that I think is interesting. So will it trade above 50,000? We're saying yes. Let's see how that one pans out. Okay, on to currencies. Okay, so so this again, there was a 6, I think it was a 6 or 6.5% move from earlier. Will the rand dollar finish? Okay, so now note this when you're filling in your survey. Will it finish above 2024? So this is like saying from here. I mean, we kind of flirted with 20 last year. You've got kind of the move there. I always do a lot of technicals on this because we do a lot of trade backwards and forwards, specifically in dollars. I think dollar is just so key to the global economy still. Even when we had Martin Luther King Day the other day, it actually shuts down all contracts through South Africa. When you're buying Aussie dollars, it actually shuts down the ZAR Aussie dollar contract because everything first has to trade into dollars and then into another currency. So incredibly important currency globally, something we look at all the time. You can see we've had a kind of a weakening trend. We've had a rand strength trend or a weakening dollar. This was back in kind of 2020, 2021. But since kind of like early post-COVID recovery, it's really been one-way traffic. We've kind of gone through a consolidation period. A move up now, above 20 seems reasonable to us. If you went to the top of the channel in the next little bit, you're probably going to go and knock on $20, $21. So I think our call from my point of view, from a technical point of view, probably, unless that trend breaks from a trading point of view, definitely weaker. But from a fundamental point of view, I don't know, Viv, what do you think? Like South Africa versus the US, interest rates, inflation differentials, what do you think?
Also, our ability to export Transnet has been really troublesome, and I think it's going to be more of an issue going forward. There's been a recent, move to push about, I think, $50 billion, 50%, 15 billion rands, 500 billion rands into basically trying to fix Transnet. But if you look at the track record with Eskom, influxes of money don't really change, fundamentally the ability of these large parastatals to operate. Eskom, look at, for instance, the recent numbers from South 32. They have something like about 278 million dollars worth of working capital tied up at the port because they can't get stuff on the ship because Transnet is messing up. Look at Kumba, also saying the same thing. So I do think that we're going to have an issue this year with Transnet, Eskom as well. We'll talk about that a bit later. But I do think that that's going to mean that we are going to be in a situation where not only the fundamentals in terms of interest rates and so on affecting us, but also the fundamental ability of us to export is going to be diminished.
Okay, we'll handle the next two questions simultaneously. So both of these, we're essentially saying stronger dollar against both euro and against the pound. If you look at the levels, 1.09, one spot 25. It's kind of where we're trading at the moment, more or less. I mean, we're pretty close to these levels, but we think stronger dollar. Why are we saying stronger dollar, Viv?
I think the US is going to be the strongest economy in the developed world this year as well. I think we're going to have severe weakness in the UK and in Europe. I think Europe especially, we've seen Germany come down significantly. They shrank last year by about 0.3%. They've been really badly affected by what's happened with Russia. Yeah. They're going to go through, some difficult elections. They're going to be a lot of uncertainty about Germany. There's even a move in Germany to have a German Jexit, I don't know how you pronounce it. But the Jexit, maybe. But they are looking at there's the AFD, the Alternative for Deutschland party. It's a more right-wing party. It's not the second most popular party in Germany. The current ruling coalition is nowhere near that. The Christian Democrats are the guys that are basically there. Is number one. The current chancellor is one of the least popular politicians in Germany at the moment. That's the difficulty there. In the UK election as well, the Tories will be replaced by Labour. Labour is going to probably be more left-wing. But even beyond that, their economy is not recovered from Brexit. They have not really gotten a plan together, and they have been the worst performing of the large in the developed economies for the last little while. So I don't think that they're going to be doing well. So yes, all the way.
US all the way. And we're following through that, but I've left this question separate. Will USD JPY finish above 150? Now, I think there's interesting things going on within the Japanese economy at the moment. I mean, obviously, Japan has a huge debt to GDP. They don't really have much space to move in terms of interest rates. Facing a currency crisis. I mean, one of our black swans last year was like, is there going to be a Japanese debt crisis? I mean, what's your read on Japan at the moment?
Look, I mean, you look at that graph that we had about the demographics. Japan's going to lose 40% of its working age population from 2000 to 2050. That's huge. You imagine cutting your workforce by 40%. How are you going to produce the same amount of stuff? It's a huge drag on the economy. And in addition to that, you also have this huge old age population. So many people above the age of 65, they're going to need to be taken care of, need to be basically supported by the government and by savings and all those kind of things. So that translates into a huge debt burden. And at the same time, they already have a huge amount of debt. They are the biggest of the large economies when it comes to their debt to GDP ratio. So how are they going to service that debt? How are they going to pay off the debt when they have less and less people working? And the way they basically handle it is they have all the savings, they've all this built up wealth from the last couple of decades. And what they've done is just basically try and hunker down and get through. So when every other country in the world is raising interest rates, Japan could not, because if they did raise interest rates, this massive debt would cause a huge amount of increase in interest payments, which they could not afford to do. And so they basically trying to go to that. It kind of destroyed their bond system, by the way. Private buys of Japanese bonds were really, really diminished over the last year. And the central bank had to step in numerous times to basically control this. And I think over the long term, betting against the Japanese yen, betting against Japan as an economy is probably a reasonable bet.
Okay, question for you, not part of this, but Japanese stock market though.
Yeah.
Because Japanese stock market is priced in yen. You've got a much weaker yen, but stocks like Toyota, Nintendo, things like that. You think that the actual underlying index, like from a price, not in dollar terms, but just in a price terms, you think we're going to see that continue going up? I mean, we've been hitting 34-year highs. You think that could potentially move higher?
I think it could, because the thing with like larger corporations, they don't really take about as much people as you would think compared to the like a small business. I mean, small businesses may have a smaller share of GDP, but they take out a disproportionately large amount of workers because they are less efficient. Toyota, for the amount of GDP is involved in it, takes a small amount of workers. So they're not going to be without workers. They also produce around the world, not just in Japan, and sell around the world, not just in Japan. And so, yeah, a lot of the Japanese companies also have outside access to we talked about Sony, we talked about Toyota, we talked about all those car makers, the electronics goods makers, and so on. They have a lot of ability to basically to survive even a big crash.
It was a bit of a loaded question, because I think one of the indices that we've been using in some of our structures is the Nikkei, because you're not essentially taking a bet against the dollar performance of underlying Japanese companies. You're actually taking a bet on the index priced in yen. You get a weaker yen, you get companies surviving, even if it falls in dollars, like you can get some significant payoffs there. I haven't put it in this presentation, but something interesting to think about going into the rest of the year. Okay, let's have a look at interest rates and inflation. Okay, so this is the big one, I guess. So this is our layup question. Yeah. Just to pad the stats a little bit for next year. So will there be the first interest rate cut in the US before July? We're saying
100% yes.
Almost certainly. So I think personally that we are going to. Do you think we're going to get an interest rate cut before the end of the first quarter? I
doubt it. The market says like it's got a coin flip. They see it's virtually like a 99+% certainty that we can get it by.
Let's have a look at it. Yeah. So this is just off the FedWatch tool. So you can see this. So the top left chart here, that's the probabilities that the Fed will cut interest rates by before, or it's the probability of what the rates will be on the Fed funds, at least what the targeted Fed funds rate will be at the 31st of July Fed meeting. And you can see currently we're sitting at 5.25 to 5.5. There's a 0.1% chance we'll be there. There's no chance that will be higher according to the market. The market is saying that we will see basically a couple of cuts before then, more than 25 basis points down before then. Probably looking at, I think there's a 26% chance we'll be 1% lower on Fed funds rates. So that's kind of the target for mid-year. So we are saying interest rates are falling. Market is saying interest rates are falling. I think we've got to agree with that. I've also put up the 20th of March meeting stats. As we've said, a little bit of a coin flip on this one. 56% chance that we'll see no change before March, but still 42% that we might see a cut. So that's actually where the borderline question probably should have been if we really wanted to make a borderline. I think we are paying that's a little bit there. But yes, first interest rate cut before July. I think we are seeing cuts this year. That's definitely the message. Will the US cut interest rates 4 times or more? Now, this is more of a borderline question because the Fed is saying absolutely not. I think Goldman Sachs came out and said 5 to 6 cuts this year. Of course, it also depends on the quantum of the cuts. If they start cutting at 0.5% per time rather than 25 basis points per time, that's obviously going to affect the number of cuts. If they stick to the kind of 25 basis point profile, then more cuts but less movement. But we're saying yes, we think 4 times or more. That's more than the Fed is saying. And in line with the market, but some investment banks are a little bit even more aggressive than that. You happy with 4 more?
Yeah, I think the Fed is going to be cutting pretty aggressively going forward because we do see weakness coming through. And I think in an election year, the last thing the Fed wants to be doing is have higher interest rates, ahead of an election because it could be seen to affecting the outcome of the election.
Yeah, and I think SA will be cut 4 more times. We're saying yes as well, because to an extent, central bank policy is very linked throughout the globe. So if the Fed cuts 4 times, it would be very surprising not to see the Reserve Bank locally cut more than 4 times. But I think the interesting question here is, will US inflation drop below 2.5%? And we're going with no.
Yeah.
Why are we going with no? Because surely the target rate from the Fed is 2%. So we're saying they're going to start cutting interest rates 4 times or more before they've hit their target rate. I mean, what is that? 12 to 18-month lag in monetary policy? Is that the call? Or the Fed is just weak? What are we saying here?
Okay, so I'm saying that basically, it's like a dieting. Losing the first 100 kgs is easy if you weigh 500 kgs. If like 200 down to 100 kgs is going to be much more difficult. If 100 is your target weight. So getting down to 2%, which is the target thing, is going to be more difficult. A lot of the base effects that were helping out, the big drops recently are going to be diminished because, that happened last year. And so I do think that it's going to be more difficult to get towards the last 5% than it was to drop the previous 0.5%. So it was dropped the previous 5%. Go from 8 to 3 is probably a little easier than going from like 2.5 to 5 to 2. Yeah. So it's going to be a more difficult thing to occur. And I do think that the Fed is going to cut ahead of hitting its target.
Ahead of hitting its target. Okay. If you're wondering where inflation is at the moment, I've just put 2 inflation charts up. Not everyone has a very, these also to help you answer the questions accurately. So, that's where South Africa, we're sitting at 5.5% at the moment. US inflation sitting at 3.4%. So we are well within target. Our target band 3 to 6%.
But the Reserve Bank has made it clear now that 4.5 is in between is the real target.
Is the real target. So, but still,
it's not out of the range, but
we're looking okay. We're looking okay from an inflation point of view, which is interesting because like I say, last couple of years, I mean, it really has been any shock that comes into the system. We're just thinking cut interest rate. The one shock you can't just cut interest rate into is inflation, which is what we had 2 years ago, which is why I think we saw the market getting punished. And it does look like we're now through that. So I think interest rate cuts coming. Stock markets are up aggressively over the last year, but out of bonds, stocks, cash, we've got to be stocks.
Exactly. And also it must be mentioned that we saw the S&P 500 rise dramatically last year. The US stocks didn't go not that much. The reason being is that much of the movement that happened in the S&P was not due to in the overall market going up. It was due to the tech companies going up because of AI. The AI shock was separate from what we expected. Last year, we expected the market to rise because interest rates were being cut. Interest rates are going to be cut this year, so we expect the market to rise because interest rates are going to be cut this year. Last year's rise was actually a surprise due to the AI.
And you'll see that. So we also give a model portfolio at the end. I think won't give away the champion of that just yet, but there's no surprises. Anyone that picked AI last year, that's I mean, the Magnificent Seven were basically the whole of the S&P 500's performance. I think, you haven't put it in this presentation, but just certainly in our research discussions, throwing ideas around where the real value is going to be generated this year. A lot of guys looking at the Russell 2000, so looking at those kind of, more mid-cap US stocks that haven't moved, that will be a beneficiary of cheaper money, could be an interesting idea for this year. Economic growth. Okay. Will the US GDP be above 1.5%? Okay, so these are just, will they be above? Like one of the prints above this level. So we are going with US, yes.
Yes.
Yeah.
Look, I mean,
if you want to look at the US GDP there, that's annualized GDP. Well, is that annualized? No, I think I've given you annual GDP. Okay, but US GDP.
Look, I mean, we are pro-US. We think it's still going to be the best country in the world. Large country was investing. Predictions are about 1.5% growth in 2024. I think we'll be slightly above that with the US.
Okay. China, will China GDP be above 4.5%? So China just printed at 5.2%. If you look at the chart on the top right-hand side, Chinese economy, we are bearish.
Yeah.
We are pretty bearish on the Chinese economy at the moment.
Yeah.
Well, you want to take us through our China case?
Okay, look, here's a couple of things. Firstly, China has a declining population just like Japan does, but they're much, much poorer than Japan. They have a huge property sector issue that they've had for a while, but it's coming to a head right now. Evergrande, all those things, Country Road and so on, they talked about these issues for a while. They're coming to a head in the last year or so. They have a person in charge, Xi Jinping, who is 70 years old. And unlike, for instance, Biden or Trump, who we'll talk about in a bit, he really controls that economy. He says this things happen. Talk to people from China and they say, like, in private, which was just how crazy it is. I mean, people will have a book by Xi Jinping on their desk. And, when they talk about a company meeting, they'll spend a few minutes in every company meeting, just like me and Gary and like Yaku and stuff having a company meeting here. And we'll start, and I'll be saying, Xi Jinping says this about this. And Gary will say, yes, Xi Jinping's wisdom is so wonderful. And he'll give us like a bit of a spiel about how wonderful Xi Jinping is and how we get wisdom and guidance from his words and stuff. It's a true personality of cult here. A cult of personality, sorry. Cult of personality. And this is for a 70-year-old man. He's not getting smarter. He's not getting better, more competent. And he was never that great in the first place. Now, Deng Xiaoping, the guy that basically took China out of poverty, steered them through the Tiananmen crisis, he basically handpicked his next two successors. And they're the guys that grew China from what it was in like the 1980s to where it was 10 years ago. Xi Jinping basically inherited an economy that was set to become the world's largest economy, looks set to become the preeminent power in the world. And he's done nothing but make missteps along the way. And he's the guy that's going to be in charge for the next couple of decades.
But I'm going to cut you off there before we both get disappeared.
Yeah.
Okay, onto will the EU's GDP be above 1.3? What do we think?
No.
EU. Well, what's our take on the? Okay, I don't have an EU chart up here, but what's our take on the EU? I mean, there's been some big moves in the underlying stocks. I mean, again, it's been quite specific. Things like Novo Nordisk out of Denmark. I mean, like massively moving the Danish kroner there. Just because of their success with Ozempic and Wegovy. We've had LVMH becoming briefly, one of the most valuable companies, certainly in Europe, and their CEO becoming richest man in the world at one point. Yeah. Luxury goods looking good there. I looked at some of the underlying auto manufacturers, like BMW, doing very, very well on the exchange. But overall, you get the sense that the EU is still like just a place of regulation. Yeah. You don't feel like shareholders are really going to be rewarded in the EU the same way as shareholders are rewarded in the US. It's far more about stakeholders than shareholders, where the US is more about shareholders and stakeholders. So I think, I'm still a little bit concerned about EU. I think there's definitely some very interesting investments, things like ASML, for example. I think there's very interesting kind of unique opportunities, but broad blanket exposure to Europe?
No. Look, Germany, the biggest economy, grew by minus 0.3% shrunk last year. They are really being hit badly by what's happened with Russia. They don't have access to this cheap energy they had before. And we showed earlier, declining populations in Germany, in Italy. France, by the way, is one of the best performing of the large developed countries in terms of its population, even though it's slightly below replacement there. And also, just to point another fact here, the EU entirely avoiding AI. They have put in so many restrictions on AI. There's no chance that any AI company is going to be created there. And in addition to that, if you look what happened basically with I think it was Adobe and a company they're trying to buy, they basically were impossible to buy it because of restrictions coming in from the British. Okay, so if you're going to be operating with a global economy, why would you basically operate and start a business in the EU? It doesn't make sense at the moment. There's just too many restrictions and too much regulation, as Gary said.
Yeah. Okay, India, which I think we're more and more optimistic on India. So will India's GDP be about 5.5% this year?
Yes.
We're saying yes. You want to talk us through that one? So I've got Indian GDP up there, currently at 7.6.
Yeah. Look, I mean, we're all assuming slightly lower GDPs for all these places. Like we look at less than 5% for China, less than the 2% for, towards the US and so on. The reason being for India being as part of it is there's much more of a domestic economy in India than it is in China in terms of consumption. A lot more happening in terms of infrastructure. Like they built, I think, a third of all their roads in the last 8-9 years. They're building like new highways, new whatever, and that's generating an economic activity there. It's an election year, so they're going to be spending more. And I do also think that the reforms that they've put in place in the past are just kind of building up steam right now. Whether or not India will be as rich as China, I don't think so. If India continues to grow at about 6% a year, 7% a year, but by the next 25 years, they still will not be as rich as China is right now. That is the
GDP per capita is just so low.
So low, yeah.
Which I suppose can be seen as an opportunity.
Yeah.
A lot of potential growth to come. Will SA's GDP be above 1.5%? You're saying no.
No.
Again, Transnet issues.
Also, I do think we'll talk about the elections in a bit, that the elections are going to be pivotal for the economy, because what's going to happen, my belief is that we might just find a bit of fiddling around load shedding ahead of the election, which would mean that load shedding after the election might be a bit higher than anticipated. And like I said, Transnet, massive issues. So yeah, not very good for South Africa, unfortunately, this year.
Okay, on that note, let's move into the political side. So a massive political year. We've got UK elections, US elections, South Africa elections affecting us.
Yeah.
But I mean,
India, Germany.
Yeah, but I mean, US and UK, I mean, also both of them are just so binary. Like it's kind of can go either way. And
not the UK.
Not UK. UK pretty.
UK is guaranteed almost.
Yeah.
It's not just going to be a victory for the Labour Party. It's going to be a victory that rivals any other victory they've ever had. Okay. So it'll be maybe the biggest victory in history for the Labour Party.
But US could go either way.
US is going to be much more.
And depending on who comes in, could be very big shifts to foreign policy.
Yes, it could be extremely important shifts, especially around Russia. That's
so very binary. So a lot of risk out there. Yeah. Okay. Take it through. Okay. Will the ANC's vote share fall below 50% this year? What do you think?
I do think it will for the first time ever. I don't think it's going to go below 40, but below 50 is probably very likely to happen this year.
Okay. Will the EFF win more than 11% of the votes?
I do think that the EFF is going to.
That's kind of where they're sitting at the moment.
So the 11% is pretty much just slightly above where they were in the last election. I think there's a good chance they do. I think people that do flee the ANC are going to go more, left wing, not more right wing. I don't think they dislike the ANC policy. They just don't dislike the ANC's corruption, I think, and that might be something that feeds through here.
Okay. Will the DA win more than 25% of the vote?
No.
Saying no, that's a big move from current.
Yeah, I know it's like a 25% move from
5% move from
up from where it is right now.
Okay.
But I think the DA talking about breaking like 40% or something and being the biggest party, or being able to form the opposition, or being able to form the government because they have enough people there. I don't think it's going to be happening. We've seen a lot of people taking up the Freedom Front and so on, and the DA hasn't.
Too many small parties.
Yeah, too many small parties that are often like eating the DA's lunch.
Okay, then will Trump or Biden win the US election? Now this is kind of like a big if. I mean, both are elderly. We might not have a Biden-Trump election at all, just because we might not have Biden or Trump by the time we get to elections. Yeah. But if we do have Biden and Trump, what's the picture? We're going with Biden.
Yeah. Just to be aware, current polling puts Trump as a significant favorite for the election. All the places that he needs to win, he's winning by a large margin. The reason I put Biden up there is that we saw in the last U.S. election, this was a midterm elections where the Republicans are supposed to do very well. they did basically just slightly better than the last time around. They were supposed to like have a red wave, and it was like a red trickle. They took the Senate and they didn't take the it was or they took the Congress and did not take the Senate. The reason is Roe v. Wade. It's about abortion. Abortion is a very big topic in the U.S., and whether the Republicans are universally against abortion and Democrats are usually for abortion, recent referendums in places like Kansas and so on shows that the public has moved on from that. It's like gay marriage. It was a topic, say, 20 years ago. Now people are in favor of it. Abortion is something which most people are in favor of, and it really not just is something that they're in favor of. It really motivates people, especially women, to vote, and they're much more Democratic women than the Republican women. So I think that's going to be the thing that gets Biden through.
Okay. Yeah, so now we go on to markets, which is the last. I think we're optimistic on markets going ahead. We've got an environment where interest rates are being cut. I feel like there's a resilience. We're talking about it on the desk earlier today. I feel like there's a resilience being built into markets. Like, what is going to happen to really have to spook markets into sort of a 20-30% collapse in an environment where we believe interest rates will be coming down? I mean, we've just been, recently, in very recent memory, through COVID. What did we see in COVID? We saw, we had people in China being welded into their houses. We were all locked down. Economic activity was absolutely crunched. And we saw people panicked, and we saw stock markets absolutely crashing, and we saw them recovering quickly. And I think, that kind of belief that markets will always recover, I think we've almost built an immunity to fear. And we're talking about, like, what could be a potential catalyst? What is the unknown that could potentially happen to really spook the market into a 40% decline? We're talking nuclear war. It's got to be World War III or something along those lines. But, I can't really see anything really spooking markets given what we've been through. And I don't know, you just get the sense that lower interest rates, this market's going to rise. It's got to be pretty horrendous to see a crash at this stage, I would think. I don't think markets are particularly expensive.
I think maybe a financial crisis of some kind.
Maybe a contagion in the banking sector.
Maybe something that we worry about. And that is something I think that we are probably a little overdue for one. So historically, we've had these things like, these like decade or so, and we haven't had one basically. Remember, 2008 was 15 years ago, 16 years ago. That's a long time. But Gary is correct. We've gone through quite a bit of stuff. And what's usually happened here is whenever we have a crisis of any kind in the last, say, decade and a half, we've just gone to ZIRP, which is zero interest rate policy. And zero interest rate policy means that stock markets go up. That's just the way it is.
So will the JSE end above 4,000? Yes. Will the S&P end up above 5,000? Yes. Euro stocks finish above 4,000? Yes. MSCI above 3,150? Yes. So we're saying markets up, basically. Equity markets are the place to be this year. We think bond markets, are obviously attractive.
Dropping interest rates usually make bonds go higher, but
you should see capital appreciation in the bond market as well. I think it's probably also be a good year for bond markets. I think it's going to be a good year for investors.
Lower interest rates are good for investors.
So with that said, we're probably going to go in a 40% decline. So that's S&P 500. Okay. So now this is a Black Swan bonus round. So these are just a couple of questions that we'll throw out there. We don't score these questions, but will there be war between the US and Iran? Now that would be massive.
Yes.
That is huge. What are the impacts of a war between the US and Iran?
Okay, like I said, it's going to affect a couple of things. It's going to mean that there's going to be less oil flowing through Strait of Hormuz, if any at all, which is going to affect India and China and much of Asia, which is going to basically also affect, the production, the supply chains around the world. Because even though people are moving stuff away from India, from China, this is still the supply, of the world's, manufactured goods, especially in China. But to a certain extent, also coming from India and other parts, places like Bangladesh makes a lot of like clothing and whatnot. So it really will affect the world supply chain. It could affect inflation. We say no, but just to be aware, this is not no at 1% chance of it happening. This is no at a 20% chance of it happening.
I think we were discussing the percentage, and 20% is pretty serious. That's 1 in 5. That's a Russian roulette number.
It's worse than Russian roulette is six bullets. This is 1. This is 5 bullets. You know what I mean? So this is a case of why I would say that, because Biden wins. Like I said, people are really looking for a scapegoat for the whole stuff towards Israel at the moment, and that's going to be Iran. Unfortunately, Ukraine seems to be losing that war pretty hectically. They need, according to the new army chief, about 500,000 more, soldiers. They're basically conscripting people anywhere between the ages of 18 and 60, including people with mental health issues, like diagnosed disabilities, brain disabilities. And that shows how desperate they are with that. And they have not been able to break through the Russian lines. And unfortunately, it's some stuff about the whole military-industrial complex stuff is true. And if Ukraine is failing to absorb that $100 billion, sorry, of aid every year, maybe something in Iran might be interesting as well. So,
okay, so it's a no from us on the balance of probabilities, but something that I think you need to keep on your radar. Will China invade Taiwan? Yeah, we're saying no, and I think the probability of this is probably lower. Yeah, so less than the US versus Iran, but also incredibly significant. Just because Taiwan semiconductors like TSMC. Taiwan gets invaded by China. We don't have chips.
Yeah,
we don't have phones.
The high-end chips, that stuff that makes your phones.
We don't have PCs.
Yeah, the high-end
updated. Yeah, I mean, big impact globally.
Yeah, right? This is. There's a guy who ran for president of the US, and he's dropped out. It's called Swan, and he kind of said it very clearly. He said basically, for some reason, this is the way the world economy has functioned. We've come to a point where our modern way of life depends on Taiwan being not invaded by China, literally, because all the high-tech stuff that we do, not just in terms of cell phones, whatever, computing power, AI, those kind of things, all depend on the chips that are made in Taiwan. And yeah, that's a big danger.
Okay. Will full self-driving, no person behind the steering wheel, no human input, become a reality this year? Yes, I think we're close.
I think we're close.
Very, very close. Like, we're not close to a rollout. We're not close to,
going past the legalities.
Well, again, you listen to Elon Musk talking about this, like, eventually the amount of data that they have is going to be very difficult. The case that they're going to make is going to be very compelling. It's going to be very difficult to say you should put a human behind the wheel instead of a robot, because it's just going to be that much safer. But the rollout is still years away.
Yeah.
But a full demonstration where we have practical
on
normal roads
without even using. Yeah. So basically, I think it's coming up. The reason being is that I think that AI, the way AI works is that you basically take a bunch of data, pump it into this kind of network, like this neural network, and you get a file out that tells you what to do in certain circumstances. The amount of data that Tesla has is something like 160 billion frames of data every day, okay? Because of all the Teslas out there with cameras and so on. They've just invested more than they ever have in the past in terms of new chips. Elon Musk, okay, he's talked about the fact that he wants it for, unless he gets 25% voting rights at Tesla, he might develop AI elsewhere. But that AI is more going to be the LLM stuff. It's not going to be self-driving, because self-driving is definitely in the realm of Tesla, and there's nowhere you're going to get the data other than Tesla. Tesla has that a huge advantage when it comes to data. The self-driving ability, I think, is going to be solved as a problem, just like how right now drawing is solved as a problem. Quite frankly, if you've seen the latest Midjourney, you've seen the latest DALL-E and so on, to a large extent, drawing is a solved problem. And I think that's the way it's going to be. The legalities of how you use those drawings, or how you basically going to use that, technology, like Gary said, might take a couple of years.
Okay. Will there be a return to the banking crisis? And we're classing that as a significant banking failure. Now, this is interesting. So there's something coming up that you'll talk about in a second. But I mean, last year we saw wobbles. We saw wobbles in the US banking system. It was really constrained to the regional banks. The big four. I mean, we do invest in Citigroup and JP Morgan. They actually ended up as a beneficiary of this because they have limits on how many assets they can take in. It's the same as the Credit Suisse UBS case. There's no way if you took UBS and Credit Suisse and they would like to merge that would have passed antitrust. But you suddenly have a banking crisis, and suddenly you have a please can Credit Suisse be bought by UBS situation. So it did actually end up as a beneficiary for the larger banks. And I mean, we hold JP Morgan and we've recently acquired Citigroup as well in the global equity portfolio. But the banking crisis, you think it's going to flare it up again? We've said yes, we do think we will see a significant
about the 2008, but I do think like the stuff like happened last year with Silicon Valley Bank failing, that kind of thing can happen again this year. And the reason being is that a program that was put in place to protect banks against such failures expires in March, and they haven't really come up with a plan about what to replace it just yet. And it might require another bank to be in trouble before they do that. And the way this works usually is that when a bank is in trouble, what they do is let it fail, and they step in to basically pick up the pieces thereafter, as opposed to helping the bank, because there's the thought about moral, it was a moral, what's it?
Moral hazard.
Moral hazard, yes.
Yeah.
And I think that is something that probably might occur again this year, especially if you think of the fact that we're going to have probably a commercial real estate crisis that's going to continue for the next couple of years. Very easy to see that there's a lot of trouble. Even with falling interest rates this year, there's still a lot of trouble. Adam Newman, the guy that created WeWork, when he left WeWork, that this is one of the cases where people always in certain industries seem to never be able to fail, was able to raise hundreds of millions of dollars to do another company. But this company is a WeWork, like WeLive, where basically he made apartments look like office spaces. Apparently, that company can't pay its next interest rate bill of about $60 million. And that's going to be an issue going forward for a number of these players out there. Maybe not as famous as Adam Newman, but still, yeah, there's going to be a crisis. There's likely to be a crisis again in the banking sector in the next year because of a number of different factors coming to play at the moment.
Yeah, but a mini crisis.
A mini crisis. Not 2008,
yeah,
but 2023 again. Maybe.
But I think, yeah, a significant bank failure, I think, could be on the cards this year. So we're going to say yes. Will a third-party candidate be above 10% in the US elections? So we talked about Trump Biden already. I think we're going to see this.
Yeah, I mean, the person that would probably be there's a couple of guys going. The guy called Cordell West. He's a very famous black academic in the US, but he's not going to be the one to do it. The guy that probably is going to be able to pull this off is a guy called RFK Jr. RFK, like JFK. This is his nephew. Okay, so he's a Kennedy. He's kind of a Democrat. Been a Democrat his entire life, of course, because he's a Kennedy. But he was unable to run in a primary because there's no primary effectively in the Republican, in the Democratic Party this year. A guy called Dean Phillips is running there, but he's basically been just sidelined as well. But even Dean Phillips, who's a virtual unknown, is polling pretty high in that primary. The majority of people in the US, over 60% of people in the US, don't want to see Trump and Biden run against each other again. Biden is almost certainly going to run if he's alive and reasonably healthy. Trump is going to win probably because he's down to him versus Nikki Haley. And you think that the Republican Party is going to vote for a Indian woman over Donald Trump to be the candidate for the Republican Party? I don't know. Namrata Singh is not going to beat Donald Trump in my view. But yeah, so we're looking at Donald Trump versus Biden, something that the country as a whole, 60+% don't like. RFK, huge favorability rating, more favorable than anybody else. Big name recognition because not just his family, but also all the stuff he's done. And so, yeah, I think 10% above. And just to understand, we haven't seen any of these guys previously until Ross Perot, which was basically 40 years ago, almost like 30-something years, 33 years ago, do this. And so this will be a big change.
It'll be a big change. But get this right.
Big change.
It's a big change. So safe bet against us on this one if you're filling in your survey.
Yeah.
And that comes to the end of the questions. We're going to look quickly at practical application because we threw the thing. So our practical application, so as I said, like from a market point of view, we actually did exceptionally well last year. And part of that was adjusting and part of it was that, we have a very solid model that we manage money to. So, if you're looking for ideas, we're still very in favor of the AI trend. I still think that there's more upside in this. The biggest position in the global equity portfolio at the moment remains Alphabet, obviously a big AI player, just so integrated into our lives, continually ranks incredibly well on our quant models. Visa, BlackRock, JP Morgan, we've already talked about the banks, and NVIDIA Corp. So NVIDIA, you're absolutely continuing to shoot the lights out. We have trimmed slightly at the end of last year. It just became such a large component in the portfolio, started kind of diversifying further, but still a significant, still a top 5 holding for us, even at these levels. Global equity portfolio. Okay, so this is the December 31 fact sheet. You can get all our full fact sheets on the website. But this was year to date, end of 31st December. I mean, we did 23.32%. That's after a 1% fee. That fee is included in that performance statistic versus our benchmark at 21. We've outperformed again since inception, which is just around 7 years ago. We're up 115% in US dollar terms. So add the rand appreciation into that. I mean, we are way ahead of certainly, weirdly, like a lot of the big South African asset managers that have global portfolios dramatically underperform the index, which was strange. When I do my first global equity portfolio update, I'll take you guys through the ASISA averages and that just to show you how well this portfolio is performing. But yeah, looking really good. 3 and 5 years also beating benchmarks. So very happy with the performance. What is the model on this portfolio? We go buy big blue chip companies that are really too big to fail, but that have good growth profiles or an exceptional value. We run quant ranking scans. We get a lot of sell side research. We rank essentially the analysts that are covering it. I don't have a special insight into Google, but I do have research that is not available to the general public, and we leverage kind of like our own tools.
When this is Gary runs a sort of point of fact here. Look at that benchmark: 89% since inception, 68, almost 70% in 5 years. Like one of the tricks that people use when they make up these portfolios and to see we beat the benchmark is they make benchmarks that are quite easy to beat. You know what I mean? So yeah,
it's in our ethos. We make questions that are hard to answer, and we make benchmarks that are difficult to beat. And mainly, we don't really care about the benchmark because I don't charge performance fee. We don't charge performance fees as a standard. But our job is to perform, so we charge the standard management fee, and that's really the administration of putting together the portfolio and making sure that we have the systems and tools in place that we can manage your money effectively. But we don't try and take exorbitant fees when we do very, very well. We just say, that's your money. That's what you're paying us to do. So yeah, thanks for the punt. I'll give you a punt on your AI portfolio. Then we also run a South African equity portfolio, obviously smaller. So interesting. Bidvest is actually our biggest holding. Hopefully you guys will, we will share the presentation, but scribble these down if you're looking for stock picks. We've got obviously Billiton, FirstRand, Process, MTN as the top holdings in the performance, at least in the portfolio. Performance has also been very, very good here. So we kind of matched the market last year, but we actually started an equity portfolio in 2016, and no one was interested in it, to be honest, because it was really like from the client base that we work with, the mandate was basically, we want international, we want international, we want international. We're managing a lot more money inside of the typical regulated structures, doing it inside the RAs and the living annuities, which have enormous tax advantages. So that this portfolio has been running it's basically coming up, it's 1 month away from this 3-year track record. And since inception, I mean, we're well ahead of our benchmark, which is essentially the top 40 index. So also not trying to go with the CISA benchmarks or average or fund managers or anything like that. We're benchmarking against an ETF that you can go and buy. 8 out of 10 fund managers don't outperform it, and we are well ahead. So very proud of the performance there. And then as we were discussing earlier, so this is the portfolio that we launched last year, almost too short for a track record at this stage. Yeah. We were literally just implemented, but but I'm going to let you talk through this one. Very interesting concept here. So you can see a little bit of overlap. Microsoft and Alphabet are both in the global equity portfolio. We've always liked in global equity. But when did we start talking about AI? When I was reading the culture novels, and it was probably 2013, and that we really started getting interested in it. And it's one of the reasons that I actually hold IBM in the local portfolio, because I always thought that maybe we'd get a bit of a rise out of Watson, but it's not really the AI to follow. But this portfolio is specifically focused on AI and a slightly different mandate behind it as well, because you guys aren't going to sell. Yeah, that's the whole concept.
Yeah, so just understand. Okay, so we saw. I remember sitting like 2 years ago. I sent an article to Gary and said something has changed because there's a prediction, site out there that looks at the chances of AI happening, and this is often voted on by experts. And about 2 years ago, there was a huge drop off in the number of years they thought till AI. It was like 2050 to drop to 2030 to 2028 in terms of when we're going to get AI, proper AGI coming out. And the reason that was happening is that was the first time people started seeing what was happening with these LLMs, large language models, and also this new system called Attention is, or paper called Attention is All You Need, that was really feeding through the AI ecosystem. And so when we saw that there, we said, okay, this is an important thing. Then last year, GPT-4 comes out in March, and we said we had to launch something. And due to the technicalities and legalities of launching these things, it took us about 3 months to launch it. So we missed out on the first kind of bloom of that AI space, but we launched it by the middle of the year, and we're happy to say right now it's positive, but it's it's going reasonably well. But the philosophy behind it is this: AI is going to be life-changing if it works. Life-changing in a way that means that the prices of these companies are not going to be going up 5-10%. It's going to be going up 5-10+ times in a few years if they are the guys that do AI properly. If Tesla is the company that gets AI right for driving cars, it'll also be the company that gets AI right for doing robots. There's expected to be, if that does occur, over 1 billion AI robots by 2040. I'm talking about 16 years from now. It will dwarf the car industry. Okay, and the value creation would be massive because of it. That would be what we're looking at. And so the way we look at this portfolio is, if AI is going to be real, it's going to work out. We cannot rebalance. We cannot just sell a company because it became too valuable. We have to hold on. And that is what's different from this portfolio than any other portfolio. We will only sell a company if it's no longer an AI company. We don't think it's going to be a predator.
And I think it's important to understand this, because like the risk, it's a different risk tolerance. It's a whole different concept when you're investing. But essentially, it's buying Naspers and allowing it to grow. Multiple bag, multiple 10 bagger and more, and capturing all the growth. And the idea will be when a single position, because we don't like the point is, at the moment I look at those companies, I think, hey, Viv, are you just, I mean, you've got all the big blue chip companies in there, but that's going to change, because at the moment we don't know what the next big AI company is going to be. We don't even know what the real application of AI is going to be. But the idea behind this portfolio is that we keep on top of it. And when the internet was starting, you might have thought Netscape Navigator was going to be the big next thing, but you probably didn't think Airbnb would do well, or Uber would do well. Facebook, yeah. So that was really where the application came through. So this portfolio is really about, when I say we won't sell out of it, we will sell out of it as it becomes apparent that this company is not going to capture the multiple exponential growth, put it that way. If a single position, so let's say the new AI, because I think the big AI winner is probably not founded yet. Like, I think the company that's really going to change the world is probably still just, it might not even be a seed in someone's mind yet, but we still want this portfolio to be able to identify that position later on, which is why we're putting a lot of systems in place to be able to do that. But the idea is, when we do capture that company, if that company grows to 35% of the portfolio, we actually close that portion of the fund down and we relaunch under, basically like a Series B, exactly. So, and then those investors essentially continue to grow.
It's also got a lot of information here. You can go and look at some of our earlier,
presentations.
Videos.
But it's a very interesting concept, and I'm invested in them. So far happy, and we'll see how it goes. It's very much a thematic approach. If you don't believe in AI, this is definitely not the portfolio to you. If you think AI is the next nanotech, and it's an overhyped industry that's just going to kind of flash and die out. Or the next crypto, I don't know. Maybe crypto's going to do it. But if you think it's a flash in the pan, not the portfolio for you. If you want to capture this theme, definitely come and chat to us. So then we also do an internal stock picking competition. We're almost at the end of the prizes, but so internal stock picking competition. These were the picks for last year. I've had to, so a little bit more complicated. So these are total return numbers, and I've had to do the currency depreciation because people were not just picking on the South African market, people were going internationally. So Viv, well done. We've got his box of chocolates a couple of days ago when we did this. I mean, Amazon, Microsoft, and Meta, 126% performance. Way ahead. That's way ahead of everyone else. So only Pascal was negative, unfortunately, and we all, it also kind of influenced me. We were looking at that special situation on Nampak that didn't arrive, and we were looking for, whenever you do these stock picking competitions, you're always looking for the kind of the at least 3 times. You're looking for 300% to try and make the money. So you always tend to go a little bit more speculative than you would, in reality. But Nampak kind of didn't pay out, but a good year in markets overall, and you can see that reflected in the underlying, everyone green essentially, but anyone with tech, because like you say, tech really, if you had one tech player in your portfolio, you did exceptionally well. Essentially. And
one of the big tech players that made money.
One of the big tech, one of the Magnificent Seven in there, you probably did pretty well. So if you are looking to build a little mini portfolio yourself, of course, as I said in the beginning, obviously we're talking mainly around our Cat 2 managed solutions today, but we have plenty of self-directed clients that will be watching this. So if you're looking at building a little model, we chucked around stock picks in the office today. And
I chose Tesla, not Amazon.
Sorry, Tesla. We'll fix that. Yeah, so Tesla, Sasol, Palantir for Viv. But yeah, everyone's got their stock picks. You can kind of see the theme that's coming out here. A lot of guys picking Visa. So we've got 3 picks on Visa, and a lot of guys looking for a recovery on Sasol as well. So okay, just Viv and Yaku looking for a recovery on Sasol. But I think higher oil prices. I mean, Sasol has been absolutely murdered lately. So probably not a big pick. I just decided I'm going totally offshore. I'm going for a currency collapse. Nikita's playing it safe with some big, mega caps. Constellation Energy, interesting pick from Kyle. Vanna, the only one going very alternative. He's got an Indian stock exchange, HDFC Bank, and then Glencore and Disney, Christo, Nvidia, Roku and Grindrod. So nice mix there, but I don't know. I think he might get hurt with just how high Nvidia is. I don't know. There's been a little spike there, but like I said, you never know. Just that company seems absolutely unstoppable. So, yeah, those are the picks.
Sappi Visa with position.
Yeah, Sappi, Constellation Energy. So, yeah, some interesting picks there. Have a think about them. That's what everyone is. When you're chatting to the guys on the desk over the course of the year, give them hassles about how poorly or how well their picks are performing. It's always good. If you are interested in joining us as a client, super simple. You just go to ranswers.com, fill in, send us a copy of your FICA. Someone will chat to you about the kind of account you want to open. Please don't feel shy to come and talk to us. We love clients. And the prize giving. So for the two signed copies of these rugby books, we have JP Duplessis is our winner for this. Well done. 19 out of 25. You destroyed us in these picks, and you're a very deserved winner of these 2 books. And we're going to chuck in some chocolates and maybe a bottle of whiskey or something like that. But yeah, we'll reach out to you to arrange delivery. Thank you, everyone, for your time, and we will see you out there in the market. Good luck.
Thank you.
Cheers. Bye.